Good afternoon, and thank you for joining us today for TAD's webinar, The Outliers, the Good, the Bad, and the Ugly. TAD was founded to provide an option for home health agencies to outsource their billing, accounting, and consulting services to industry experts. Our esteemed billing specialists, accountants, and CPAs have dedicated themselves to the home care industry. I'm Mary Reyes, the Director of Operations here at TAD. I'll be one of the presenters today for the webinar. Joining me is Tonya Elkins. Tonya has over 25 years of medical billing experience, including employment within various home health agency environments. She has the ability to research troublesome processes and within the home care agency and offers a lot of practical solutions. We have a lot to share with you today, so let's get started. All of our attendees are in listen-only mode, but please feel free to send your questions to us throughout the webinar via the question box on the right-hand side of your screen. At the end of the webinar, our survey will be coming up. Please answer all those questions. We really value your feedback. All of our contact information will be listed as well. So if you have questions that don't get addressed during the webinar or are interested in more of our services, just contact us through those websites. You can go to our website, emails, all that contact information will be at the end of the webinar. So without any further ado, let's get started. What are outliers? Outliers are claims that pay where there's a significant level of care that exceeds the normal case mix weight. As you know, PPS payment groups are based on average home care experiences, and some cases lie outside of that expected experience level, requiring unusually high levels of care during that 60-day period. Medicare claims processing system will add on an additional payment or an outlier payment in addition to the regular episode payment that you would be receiving under normal circumstances. Outlier payments result in medically necessary high utilization, and they take into consideration all of the skilled disciplines in the calculation. The amount of the add-on is based on each individual's care. There's not a magic number of visits that you would provide that automatically then triggers an outlier. It's based on the assessment of that patient and the visits that you actually perform. Your MAC will automatically calculate the payment when it's adjudicating the final claim. There's no special coding that needs to be required because, as you know, Medicare looks at those final claims of all services that were rendered, and that's how it calculates that final. The good part of outliers is that Medicare recognizes that the need of some patients requiring this extreme care and that it exceeds the normal case mix and the normal revenue level. And in so doing, they will provide an additional payment to the agencies to help reduce the cost of servicing these types of patients. This is intended to be a cost-sharing effort, not a revenue source. The calculations compare two different values to determine whether it exceeds into the level of an outlier. The first value is the National Standardized Visit Rate for your CBSA region. This includes the disciplines on each claim or the projected visits, and we'll show you how you can project out that later in the webinar. The second value is the sum of the episode and the standard fixed loss threshold. And what that fixed loss threshold means is that Medicare anticipates that there are going to be some cases that you have fewer visits and some cases where you have more visits. So there's a built-in fixed loss that they feel is acceptable for an episode here or there. And that ratio, if you exceed that ratio, that's when it's going to start triggering an outlier. If the product of the number of visits and the LUPA rate is greater than the case mix payment plus the fixed loss threshold, the outlier will be calculated. A set percentage of the amount by which the product exceeds that sum will be paid to the home health agency as an outlier payment in addition to the normal episode payment. So what that's saying is that Medicare is sharing the cost of these patients and reimbursing the agency at a percentage of the LUPA rate value of the episode, not the full cost of services, thus resulting in Medicare sharing in the cost of treating these types of patients. In 2018, they went from a per visit rate to a 15-minute unit rate. So you want to, when you're using the pricer that we're going to get into, you want to make sure that you're looking at a 15-minute increments as opposed to a visit rate. And they're using that in that calculation. Medicare offers a free software called the PPS Pricer that can be used as a tool to help determine your reimbursement for the amount of the outliers. We'll be showing you the software and how to use it in your planning, the reimbursements when you're admitting patients and such. You can download this at cms.gov website. Many of the different billing softwares also have a pricer component in there. So if you're using a management software, you might want to look at those resources as well, because they you may be able to do those calculations and those planning right within your software. So now we're going to talk about the bad things about outliers. Some agencies in the past had abused the outlier benefits by adding excessive non-skilled visits to claims. This abuse resulted in Medicare implementing a capitation on the outlier reimbursement. The add-on portion of the payments cannot exceed 10% of your overall Medicare reimbursements in a calendar year. If your outlier exceeds the 10%, your claim will be paid at the normal HHRG value for that case mix. Medicare does do a look back throughout the year, each quarter. If your outlier percentages drop below the 10%, they will adjust the claims that were subject to the capitation, but it will not exceed the 10% calculation. So be aware that Medicare will also use this look back to adjust for any overpayments in that an agency has received. So look backs generally occur in February, May, August, and November in the respective prior quarters, for the respective prior quarters. And these adjustments would come through as a 32G or a 32I on your remittance advices. This is a sample of a remittance that we would look at to show whether or not the claim was subject to the capitation. So these remits that we're printing are used from the free software PC Print that again is available through the cms.gov website. If you're receiving your remittances through your software, your management software, they may look a little bit different, but the information should still be on the claim. So here we are. If you look at the red lines, this is a final claim. You can see where they reverse the wrap in the first line, and then in the second line where they're adjudicating the final claim, it's a 329. You can see that the charges in the middle of the screen are highlighted because there are over $21,000 worth of charges, but the reimbursement is only $3,764. So in this situation, I would look further and say, why didn't this trigger an outlier with that large calculation for the charges? So are you subject to that capitation? If you look into the detailed portion of the remittance advice, you can see again, we've highlighted in red that it's a 329 and the net reimbursement was the $3,700. But you also see that the remarks code has a code N523. The N523 indicates that this did qualify for an outlier, but it's been subject to the 10% capitation. After a quarter goes by and you've billed more final claims and they're doing a look back, your percentage has dropped. And this is what the adjustment to the remittance advice would look like. That first line, they're reversing that $37.64 that was previously paid. And then they're making it a 3.2I, which is the Medicare internal adjustment. And they're now reimbursing the total value for that episode of $12,167.47. But again, remember, you're only getting the additional 9 because you've already received the $37.64. If you drill down into the details of the remittance advice, you can again see the type of bill of 3.2I, and you can now see that the net reimbursement is $12,167, and the remark code N523 has disappeared, so it's no longer applicable. So you want to be aware that when they're doing the look back, they're going to be subject, there's no partial payments for that add-on portion. So we're going to do some simple math here that say that you're at a 10% capitation level and you hit it's 12,000. You've already received $10,000 in add-on payments. So the remaining that is available is only $2,000. If you bill another outlier claim and the outlier calculation is $33,600, it will not be paid because it exceeds the $2,000. You won't get the $2,000 and then the additional 16. The entire claim is calculated and adjudicated in its entirety. So that would be subject, hopefully, for a look back under the next quarter. And so here's a summary that you can have available in the FIS system. You can monitor your levels of outliers and outlier payments. In this screen, this shows you the most recent 3 years, the current year, and then, I mean, this is an old sample, but the current year would be the first one that we show in red, and then the other 2 preceding years. And what this outlier total section in the center says is that they've already received and paid $73,000 in outliers. The total reimbursement is the $828,297. So in this situation, though, be aware that the total payments are based on final claims that have been adjudicated. It does not include wrap payments. So if you tend to hold on to your finals and don't bill them within this 60 days after the episode, if you take 6 months to do it, your total payment reimbursement is going to be lower than you're entitled to. So if you find that you have a few outlier patients that you're treating, you want to make sure that your billing is timely so that you can keep that total to its maximum so that you can receive the appropriate payment for the outliers and not be subject to the capitation. So the ugly part of outliers. The capitation is based on final claims, like I just said. The 10%, if you exceed the 10% and you remain above the 10% for the year, there will be no reconsideration. So you will only receive that 10% and nothing more. And what I find to be the ugliest part of it is that the patients who need this care may start having difficulty finding agencies to help them because of the reimbursement limitations. So that's the summary of the outliers and how the calculation works and how you see it on the remittance advices. I'm going to hand this over to Tony. She's going to show you how to download the PPS Pricer and how to actually use the product.
Thank you, Mary. And I also want to welcome everyone as well to our PPS Pricer demonstration. Again, we're going to be showing samples of different softwares, and these are based on free software. There are other software management systems out there that you can utilize to get some of this data, but for this webinar purpose, we're going to just stay with general free software information. Please ask questions as we go along. You can just type it in and we'll address it, or if you want to wait until the end of the webinar, that's fine as well. So let's get started with our PPS pricer demo. The free software is found on the cms.gov website. Simply go to cms.gov and your page will appear. And in the search engine, you can just simply type PPS Pricer, and this will be the screen that will present itself. Over on the left-hand side, in the marginal entry, you'll see PPS Pricer, and it has the different types of pricers that CMS has available. You want to make sure that you select the one that says Home Health. It's in the middle in this demonstration. Once you select it, you'll go over and select your downloads. As you can see in this example, there are a couple of years because, as you know, every year the calculation is revisited. So you want to make sure you select the year that you are trying to determine the PPS pricer is good for. Now, most agencies have the same question when it comes to outliers. They want to know when they get this referral, how much am I going to be paid for this? Well, as you'll be able to determine from this demonstration and based on the information that Mary shared with you, it's kind of hard to just get a referral and say what you're going to be reimbursed, because as you go through this, there's going to be information that you're going to have to derive from your OASIS assessment once you've developed it. So you've gone to your cms.gov website, you've searched for your PPS pricer, and you've downloaded it. Simply follow the instructions that come with it. If you have any questions or need assistance with the download, you should be able to contact someone from the CMS website, and they'll provide you a little more assistance. Once you have downloaded it successfully, this is your welcome page, and your welcome page provides you with some information and their little disclaimer letting you know, like it says, this PPS pricer is a tool used to estimate Medicare PPS payments. So they're saying, don't hold their hand over the fire. This is just to give you an estimate of what you can expect. Once you have it installed, you'll want to select Enter the Claim. It takes you to this field, and this is the data that would have to be filled out in order to determine your PPS pricer. You're going to have to enter your provider number, which is your Medicare PTAN number or your Medicare ID number, the same, the patient ID number, the CBSA code, your from through dates of service that you're going to be running this estimate on, as well as your admission date. A lot of the information that you would need anyway on a claim is what you would be filling out. The type of bill, which is in the second box from the top, TOB, that's your type of bill. Now this PPS pricer can be used for different calculation, but for the purpose of our demonstration, we're just focusing on putting in data that would assist you with your outlier reimbursement. And outliers are determined based on your final claim submission, as Mary stated. So your TOB in this instance would be $329 because we want to calculate a payment for a final claim. And then you have your initial pay indicator. You put in the number 0 there because you are not expecting any penalties to be applied against your payment. If your agency was one that was selected to be subject to the 2% reduction because of not reporting quality data, then your indicator would be 2 because you want it to be reduced by that 2%. Now, some of the revised PPS pricer, they may have a code for VBP, which stands for value-based purchasing. If you are residing in a state that's participating in that, then you would have to fill out that code and put in your value-based purchasing code. But for this example, it's not present, but just in case you are one that reside in that state, it would be applicable for you. And then you put in your PEP indicator, which has to do with your PEP indicator or your partial episode payment. You want to always put in there because we're not trying to calculate this based on a partial episode payment amount. But again, this software can be used to calculate a lot of different scenarios. So just say you wanted to know about a partial episode payment, then you would utilize this field. But for the purpose of the outlier calculation, we're going to put no there because we're not looking for any PEP information. Our next box asks you to put in information such as your source admin code. That's going to be 1. The recode indicator is always going to be 0. And then you get into your episode timing. 1 would be for your early episode, and 2 would be if you were calculating it based on a late episode. The episode timing code can be found embedded in your Oasis 18-digit claim key code. So this is another example as to why you can't just get a referral and know what you're going to be reimbursed, because the calculation is utilizing information that's pulling from that Oasis assessment. And this is an example. They want to know what's that 10th position in that Oasis matching claim key or that 18-digit code. And that would be tantamount to your episode timing. And then it asks for your severity points. Again, that's from that 18-digit Oasis claim key code. That would be position number 11 through 18. And I'll focus on that a little later and show you exactly what I'm talking about if you have never really paid attention to it. But you would need to have this information in order to run this PPS pricer. And your HIPS code, which is that code that Medicare uses to assign a value, a cash value, a reimbursement amount for your claims. You'd have to provide that for them. And your HRG days would be 60 days, which is the days equal to your 60-day episode. And then we get into entering in information concerning our disciplines, the dates of service. The dates of service is applicable for your PT, your speech therapist, and your skilled nursing, and they would want you to provide the earliest date for calculating. It doesn't mean that the other disciplines, such as the occupational therapy, the medical social work, and the home health aide, it doesn't mean that these disciplines are not a factor. They're just not asking for the start of the service date for those. So the 3 that I mentioned, PT, speech, and nurse, this calculator does require the first date of service for those disciplines. And then you want to put in your visits, the total number of visits that you, if you're doing this in the beginning of like you're just getting a referral, what are you anticipating to do for this patient? How many physical therapy services and so forth are you anticipating to provide during that 60-day period? Now, in the beginning, that would be sufficient in order to run the calculator because they were based on the total number of visits that a home care agency provided during that period. But because agencies somehow figured out how to benefit themselves or make a profit, as Mary brought out, the whole outlier purpose was not so that an agency can profit, but to have a shared loss. But when the home care agencies were reviewed, they noted that a lot of home care agencies were able to make profits on outliers, and they did this by having shorter visits. And so Medicare decided that their purpose was not to have the patients to receive substandard care. So they changed their way of calculating, and they came up with the outliers based on the length of the visit. So now you see on your calculator, not only do you have the total number of visits that you are anticipating, but the total number of the units. Now, when Medicare is looking at a unit, they're looking at it in a per 15-minute increment. So if it's one visit and you're there for 1 hour, then your unit would be 4. So you'd have to kind of project out not only the number of visits, but also how long do you think those disciplines will be residing in the home in order to um, more accurately get an estimate on how much you can expect when you're doing your um, outlier calculation. So once you put in the information, this is how the screen will appear when it's completed. You have all your data in now. I'll give you a moment just to look at it before I proceed. So once you have filled in your data and you've hit the submit button, it gives you your information of what you can expect. So now if you give attention to where the red stars are, you now have an expected payment amount of $3,226.35 is the expected payment amount, but then it does the calculation to see whether or not your services will exceed that. Now, the expected payment amount in that first box where that star is, that's simply based on your OASIS data, what's to be expected based on your HIPS code. And in this example, it's 3BGP1. But now it looks at what can be expected if you provide this volume or this intensity of care for this patient. And so now it gives you a new payment of $18,492.24, which means that if you subtract the two, you can expect an outlier payment of $15,265. Now, remember Mary said that even though you run this PPS pricer and you have this outlier expected payment amount, you're still subject to your 10% cap. So if you don't have $15,000 available, you're not going to receive this. There are no partial payments. It's all or nothing. And if it does qualify for an outlier payment, it will appear on your remittivice. It will have a little remark code to let you know that this is an outlier. And perhaps when they do their quarterly review, they will look and see if you have billed more final claims in that time, because the final claim payment is what increases your Medicare payments, which gives you a wider window for that 10% payment. So your remittivice will show whether or not it qualified or not. And then if there's no payment, Medicare will at least flag it to let you know that it's being monitored to see within that year if you can expect that additional payment. But it's a good tool to have just to know what you are expecting. Now let's talk about that that OASIS data that I'm referring to, that you have to have just a little bit of that information in order to run the PPS pricer to get that outlier determination. This is Haven, and most of you guys are familiar with it, and it's that free software that Medicare offers so that an agency, even a startup agency, they can use this in order to put in their OASIS data and then be able to still submit it to them. So in this example, we're using Haven, and once you answer your OASIS question, you're going to look at the OASIS that give you your drivers, such as a starter care OASIS or recertification OASIS, or if the patient is part of a hospital readmit, then it might be a recert rock. But those are the ones that would give you the data that you're going to need, because that's where your reimbursement is going to pull from, those OASIS, starter care, recert, or recert rock. In this example, once you have that information in Haven, you can click on it and it gives you right there what your HIPS code is and that claim key, that 18-digit code. And you will be focusing on the 10th position for your episode timing, and then your 11th through your 18th position for your severity. Another example would be to just go and run a report in your software. Now, even though this is Haven, all of your software should have OASIS reports that you can go and pull the information just to see this data. And in this example, at the top, you can see again where you have right above that line, your HIPS code is listed out and you still have that claim key. So you truly need to have an OASIS assessment completed in order to get this information to get a good estimate of whether or not your claim would possibly generate an outlier reimbursement. And that concludes my demonstration of the software. Mary, did you have anything else you want to add? And we'll still be here for a moment to answer some questions. Mary.
I just wanted to mention that we do have a client that we currently has been a client for a while, and she has, I think, about 3 or 4 patients that are perpetually outlier type patients. And what she does is she monitors that summary screen to make sure before she submits those finals in for final billing that she is below the 10% threshold. So that then these claims, she may delay getting that final billed a little bit longer, but it won't be subject to the capitation because she's monitoring that. So it's important if you're taking these patients on that you do take a look at that. Here at TAD, we do billing and accounting for home health agencies, and our billers monitor and help our agencies do billing in a timely manner. And if you think you have some outlier issues, we can also assist you with that.
I wanted to go back to what you're referring to about the agency that monitors their 10% cap.
Yep.
Again, this information is found on your DDE or your FIS system in Medicare, where you go in and it actually shows you where you are. And an agency that's in tune with historically their payment total, they can pretty much monitor or gauge for the year. If they're averaging $1 million a year, then that tells them pretty much where they want to stay. So in the beginning, like the first quarter, you may not have enough money to offset that 10%. But if you know you're averaging $1 million a year and you maintain your referral sources or you even grow, then you can kind of project out how much you're willing to accept within a year, even though early on in that quarter it may look bleak, like we don't have enough. But remember, this is going to be based on your year of service. So that's good how that agency is taking the time to monitor this.
Right. It's the year of payments, not service.
Right.
So if you were billing that December 2017 episode in January, you probably won't have enough in total billing because you haven't submitted a lot of final claims by the 15th of January. So you might want to hang on to that until later into February or March even before you submit that final for billing. Because of the quarters, the way the year is. So the payment totals are based on when you receive the payment, even if it is for services rendered in the previous year.
Right. So if you submit a final claim for the end of 2017, if you submit it in 2018, that's going to be your payment year to determine whether or not you're going to receive an outlier. So in the beginning of the year, that payment, even though it's eligible for an outlier payment, you have not billed enough in that current year to offset it. But if you know that you average $1 million a year, don't feel like you've taken a hit that first part of the quarter, only because you know throughout the other 3 quarters you're going to get to your average payment total, and then you'll see that those outliers start to pay as they do the look back. So again, I think that's really wise, and I know that's something that we do here at TAD for our clients. We assist them with monitoring their outliers. They'll call us and say, hey, where am I? Or what am I averaging each year? because you have a lot of agencies, they're watching this. So what they may have to determine, can I take this referral because um, I've already exceeded my allotted amount for the year. So I do know this is something that we do offer here at TAB. So I was just thinking about that.
And that's a good point. But also remember that the look back isn't forever in time either. They're only doing the look back for the prior quarters. So, monitoring this, if you know you are taking these types of patients, it will be helping you maximize your reimbursement.
Right, good point.
So again, we have covered most of this again, so it doesn't look like there's any additional questions. But here's our contact information. If you find that you want more information or want to hear about our services, we offer a full bookkeeping, accounting, tax return, cost report services under our accounting services. And then under our billing services, we offer billing, and we bill for all payers and use whatever management software you're actively using in your agency. And we provide that additional level of supervision where we review and monitor your accounts receivable. We work with denials and collections. With the cost reports and our accounting product, we make sure that all of your data is accumulated according to the regulations, both with the IRS and the Medicare for cost reports. We provide monthly financial statements, and we work with your payroll vendors to make sure that your payroll is accurate, and any garnishments or any other extraneous payroll issues, we work with your payroll vendor to help resolve those on your behalf. So if there's no further ado, we can end today's webinar. I want to thank you again for attending, and we hope to see you again in future webinars or to talk to you about our services. Please remember that when you log out, the survey will come up, and we appreciate any feedback that you would like to provide us. Thank you, and have a nice evening.